Guys are rolling in. Good to see you guys.
What's going on with the spread today?
The spread is moving its way down because it had a couple of beautiful up days.
It did.
So it's doing a little bit of oscillating. Let me pull over my 5 minute here. I don't know if anybody's on that was running off of the TSAs. We'll cover the last couple of days here where we had, and I'll pull over the spreadsheet as well, just to give an update since we haven't chatted in a while. So we've been in this long downslope on the cross column bell curve. We see we're buried at 16 there. It was really flat. And we've had a couple of potential semi peaks. And then we definitely had a peak here back on the 13th, where we see this eighth column actually highlighted, showing us we were at a negative 2.5%, which was calling an alarm, with also the UD actually went into double digits. And we had a negative 10, which we have not had a negative double digit. If I scroll back, look at how far back I have to go until we've had a double digit on the bell curve. Here's the closest was a 9, way back on 6/13. So that was definitely calling attention to us that we had a potential peak going on, and it absolutely reacted to that, in addition to the peak so far in the oversold as well, went to a negative 27. And we had 1, 2, 3, 4, 5, 6 full days, which also has not happened. So there was multiple signals in the spreadsheet here that were calling for a potential reversal, and it definitely came to fruition. If we look at the 14th, this is the, I'm going to put my mouse over this one. Yeah, here's the morning of the 14th on the 5-minute chart, where we were expecting a slight down move, maybe right around the open, but definitely an up move for the day. And if I pull over the daily chart, we can look at what it was for the entire day at the same time. So yeah, look at this, just set up perfectly for that morning move. And on the daily chart, it was up higher because it did come back down slightly, but not much. It pretty much stalled at the end of the session there. So it was over 0.5% that we see here on the daily chart for the VA arbitrage itself, and how we measure that profit and loss. So we were above an average day, and it absolutely made the move in the morning. So that was a nice setup. And then the following day was almost a rinse and repeat, where we had a nice slight down move overnight. We'll come over to that. And it was actually a higher percentage day, because now when we look at, so there's always additional volatility at the peak that we're weary of or want to be aware of. So once we see so the next day followed in, if I scroll this up a little bit, what we were looking at was this. So we had the peak the previous day, and we see everything, yep, the eighth column is coming down, UD's coming down, bell curve's coming down. The only one that didn't agree was the cross column. It made one tick up to 17. But we did have a negative 23 came down in the oversold. But we see we did have the 0.5% the day before. So we also had an up bias coming into yesterday as well, which played out perfectly again. Wasn't quite the exact 0.5% if we look at the daily chart, but it was just shy of it, of a 0.38 on the day. And we see the majority of it again was right around that open. So it's starting to come back to recover some from that major downtrend, which we saw. If I scroll back the daily chart, which we've seen, the VA spread has been in just this down spiral with the speculative, injecting into the market, how everything's melting up and continuing to raise all the indexes. So today, it's recovering slightly from that because we've had 2 days to run. And if we look back over time, it's not very common to have 3 super strong days in a row after we've roomed. So we've had 2 big days up, so it's kind of retracing back slightly. We'll see if it's going to be a pullback before another move up, or if it's going to continue down. We'll continue to watch the signals for that and see where we end up. Let's come back to live here on the 5 minute. where we see I was kind of dead right at the open, then it did make a move down. And then we've been sideways since then.
Yeah, we had a number of issues with it looked like the market was going to dip a little bit, and maybe that's why the spread went higher. Because we typically see that the spread goes higher when the market declines, but we didn't get that the last couple of days.
Yeah, that was the other rare form, right? Where if I come back down to each day, yesterday was an odd one, exactly what you're talking about there, Dave, right? We had the market was up and the spread was up, which we typically don't see. So that's also leading to, I would say, slightly of our down move right now, because when that happens, there's typically a reversal the following day.
Yeah.
If it's not the opposite inverse normal correlation.
Yeah, what's really, it looks like we're headed to 30,000 on the Dow. Geez, it just doesn't look like it's going to stop here. So what does that mean for the spread? Well, the spread could end up going down to like, I don't know, what's the ratio now? It's like 3.18.
Yeah, we got below it. We went down to, 3.187 was our bottom there at that peak, and it's recovered back above 3.2 slightly, but we'll see where it ends up here.
Yeah, we could end up with a 3.0.
Mm-hmm.
Interesting.
Yeah, so we've definitely broken that 3.2 one time. So I'll update when we at line 1275. Let's jump it over to the trend line and update that data. Add in 3 new days here. And we'll take a look at that. We'll see, we definitely pierced that we see right there. So it's been in this long, we had one bounce off of 3.4. That was a few months ago. And then it kind of hung around there. Now it's actually broken through and all the way down.
Yeah, look at that. It's like, I don't think I've seen it in that kind of a trajectory, except for, well, actually, if you go, right there.
Try and compare it to here, maybe.
Yeah, that was a very sharp drop.
We'll see if it does another chop. If we hang out between the 3.2 and 3.4 going into the spring here.
Did you see that article in the Financial Times about the QE stuff? I posted it on Twitter. Or I'll put it in the chat box.
Yeah, I can pull it up for sure.
They make a pretty compelling case for how the rate of quantitative easing it's really been kind of quiet. They did quantitative easing, of course, during the financial crisis in 2008 to 2012. But then after that, it kind of got quiet. There was still quite a bit of easing going on. What?
Does it make me subscribe to read it?
All right, I'll read it for you. I thought it would be open here, but so what they're saying here, which is kind of the interesting part, is that QE is here to stay. They're calling this, now they're putting $120 billion a night in the liquidity. So every 8.3 days, we're getting $1 trillion in the repo market injections. And now somebody made a comment I saw when I was on Twitter that some of it is not new money being printed, but some of it is the treasuries that they had purchased that are coming due, that are, they're getting cash from those that have due that are coming back and offering. So that offers a little bit of liquidity into the market. But that already passed. That happened on December 31st. The next ones due are not going to be for, I think, until June. So they did get some liquidity from that they're using to inject into the repo market, but still they're doing $1 trillion every 8.3 days. So the FT article goes on and says we expect QE5, QE6, QE7, and beyond.
Wow.
And they say, take a step back though, the rising tide of liquidity floats, and I quote, many boats, but we know from experience that liquidity-fueled asset markets usually end badly. as they did in 1974, 1987, 2000, and 1989 in Japan. In this regard, the scale of recent Fed intervention needs to be understood. Last year, U.S. markets enjoyed their biggest effective inflow of liquidity in more than 50 years. So the rate at which liquidity is coming into the market is accelerating. That liquidity is already spilling around the world, with our global indices registering their sixth best year on record. Remember what they go on to say, remember what former Citigroup chief Chuck Prince said about still dancing, which means still dancing with the Fed on the eve of the 2008 crash. Enjoy the party, but dance near the door. Otherwise, the building could be on fire and you want a quick escape.
Mm-hmm.
I thought that was pretty good. So yeah, I think that's what's fueling this thing, and you know, I think the Federal Reserve at this point is really trying to maintain that target rate, right? Last September, the overnight rate went to 10%. The worst thing that could happen to them is that they can't control those short-term rates. And that's why they have to continue to pump liquidity. I don't see a really good ending to this at all. I think it's a 1987 event. Do you recall what happened in 1987, anybody?
That was the day the music died.
Oh, yeah. That was the biggest percentage drop in the market since 1929. It was down over, I believe it was down over 53% in a couple of days. And the biggest day was Monday the 29th, October 29th, where it went down 33% in one day. I believe that was the percentage drop.
And that was the famous Greenspan action.
Yeah. Yeah.
That was the other one that we saw earlier this week, right? As you're saying every 8 days, yeah, they're remaining, was it 120 billion every night through the 13th, so another month.
Yeah.
It's just permanent at this point is what they're talking, right?
Yeah. Yeah, it's permanent, yeah. Powell said he wants to do a permanent facility. It's not going to go away. And so even if the bonds that they bought back in 2008 are starting to come out, starting to come around, there's 120 billion, and they're actually doing the 120 billion now. It says at least. I mean, they don't put the exact amount, right? At least minimum $35 billion. Yeah.
It's like the opposite of what you qualify for in a house. Here's what you can buy up to. This is exactly, at least we're going to spend this much.
Yeah.
It'll be a lot more, but this is the minimum. But yeah, like you say, normally, just for anybody that's missed this or doesn't know, these are made to be repaid overnight. This is just the bank industry supposed to be, here, I need it for a couple minutes, couple hours, whatever it is, and it's done. 2 weeks. And then is the minimum for these terms.
Yeah.
Yeah, there's your at least 120.
Yeah.
There's all the previous ones. Yeah, 32 days, going longer.
Yeah, I wonder if, so look at
that's
that one.
Today. Or excuse me, that's the maturity. So yeah, there's 32 days ones that started back on the 16th.
On the 16th, yeah. They were worried at the end of the year. I guess there were a lot of payments due at the end of the year, so they bumped it up on the 31st. Yeah, there it is there. The 31st. It was
150 for a while.
Do they go back farther? They go back to September?
Yep, we keep going all the way back.
Look at that, yeah.
Oh, we don't go all the way to September, apparently. We stopped in November. We have to short-term memory loss.
Oh, yeah. So remember, and Dan's exactly right, that there's, it used to be, the idea was an overnight lending market, interbank. And then they extended the terms to 7 days. Now it's 14 days. I wouldn't be surprised if they go, 30 days. So is this a good time to short the market? What do you guys think?
Let's see what our other indicators telling us here.
No risk, no glory. MGI is doing well today. One of my nice little beaten up stocks. Actually, they're all doing well. I got GoPro up. I got MGI up. Really nice.
Oh yeah, that's a nice 13% up move. That's
Yeah.
cool.
Yeah, I picked up more when it was down around 209, 210.
Big move overnight, it looks like.
Yeah, and you know what? There was an announcement. I don't know if you saw it, but they're partnering with a very large remittance service within India.
I did see that announcement.
That was big a couple of days ago, and I think Wall Street woke up to the fact that, hey, this is a really big deal. Yeah, really big deal. For you guys that don't have it, this is my portfolio on beaten up stocks. Let me see if I have that.
There's a nice move on the weekly chart too, where it's going to start to break out and up again.
Yeah. Let me get that to you. I've got a portfolio I can share with you on my beaten up stocks. I did add one, and it hasn't shown up yet because I just added it yesterday. It's a URA.
Uranium.
Yeah, the uranium. It has been beaten up, and it was high as. Have you got a chart you could pull up on it? It was as high as like 220 or something like that.
I did see that. I pulled up. I can pull it up in here. Let me modify these guys.
Okay, maybe it's going to be this one. This is my current portfolio on the beaten up stock strategy. You guys can go check that out on M1. Let's see if it does the, it added URE or URA. I keep saying URE. URE was a symbol of a stock that I did. Yes, they've got it, the new symbol. What I did was I changed the target allocations. So URA now is 38%. I've got a lot of MGI. MGI was at 58%. I rebalanced them last night when I added URA. So because I don't have any URA yet, I just added it yesterday, and the buy orders went in this morning. So it's at 38%. And I brought down MGI. I kept RLGY and GoPro about the same. Yeah, I'll share that with you guys whenever I make an addition or update to it.
So there's the weekly. Let's see how much I can squeeze in here. Or I'll go with, maybe that'll move. We'll just pull up the monthly. That's easier. My favorite time chart. Remove some of those days here. For some reason, it always likes to modify that on me. Thank you, Toss. Yeah, it looks like it had a drop down to 10.6, and it definitely reacted to that.
Mm-hmm.
On a shorter time frame, at least. Yeah, that 10 was definitely a key level for it. Like you say, it was up at 220s. For some reason, my chart doesn't want to agree with me right now.
Yeah, I watched somebody doing something. talking about it, and they indicated that the amount of uranium that is on the market has really declined, and so there's a good likelihood that we're going to see increased buying of uranium because it's not just used in nuclear warheads. I guess it's used in many other industries, and we may see an increase. Now that talk about getting beaten up. I mean, man.
Yeah, 220 down to 10.
Yeah. So yeah, we get any kind of buying activity in uranium, that thing's going to shoot. I'm looking for, I don't know. You see where that consolidation is between 40 and 60?
Mm-hmm.
Yeah, that's what I'm looking at. So this is going to be another one of those long-term holders, just like you guys saw when we talked about it in the Wealth Masterclass yesterday in the last couple of days. I think this is going to be a good one. So I am loading up.
Yeah, anywhere in there. Be a nice 4x return there, 4 to 6.
Yeah. So I'm nibbling at it now. I'm not loading up. I shouldn't say that. I'm nibbling. So I'll start an initial buy. If it dips, I buy some more. The whole idea behind that is to try to get your dollar cost average as low as possible. So you don't buy it when it's going up, you buy it when it's going down. And then when your average price when the price is above your average, you stop buying. You just stop buying because it doesn't make any sense to buy higher than your average price. Now you got your average price going up higher too. So you want to try to accumulate on those down moves, so you can get your average price as low as possible. For stocks, I'm still using TOS. They've gone commission free now. I also use, I'm doing a lot more on M1 Finance though. So if you click that link up there, that's M1 Finance. I love their platform. Absolutely love it. Because what I can do is I can put the portfolio, I can design the portfolio, and then I can also allocate a percentage of the money that I put into that portfolio between all of the different stocks. I still have TOS. I use it to, I've only started using M1 Finance about a month ago. So I haven't put a lot of money into that yet, but that's what I'm using. I'm going to be using that primarily from this time forward. It's also FDIC insured. It's, Keith, were you in the Wealth Masterclass?
Don't believe so.
Okay. So M1 Finance is fairly new. They're FDIC insured. They're also a brokerage, so they're SBIC. I'm still using a lot of the stocks that I bought, especially MGI, RLGY, and GoPro are on TOS. For options, I'm using Tastyworks. I don't do a lot of option trading anymore, just maybe once or twice a month. But M1 Finance is where I'm going to do my long-term stuff. So all new money that I'm putting into the market is going to go there. I really like it.
Highest we've seen here for a while, just looking at the overall market on the internal indicators here, above 70s. It's kind of holding steady there.
Yeah, so we're probably not going to see a dip today when it's usually up at that level and it stays there after 10:30. Yeah,
we're up above 1300 over here.
Yeah, we're not going to decline today.
And the futures are reacting nicely to some of these pivots again, so that's fun to watch.
Yeah, those are really actually pretty decent.
Yeah,
I like them.
Of course, the small caps are running away, 1.2% up on the Russell.
Yeah. Yeah.
0.3, 0.5, 0.4, yep.
Yeah, so it reminds me very much of 2000. In 2000, tech stocks were and small caps really led the market, and they were the first ones to get nailed. They were the first ones to get killed. You have to be nimble with those.
Definitely. All right, what's Keith got here? Have you been doing any swing trading or using any single indicator for trading?
Yep, I'm still doing it. I don't do it as much as I used to, but I still do it. Yeah, absolutely. When I see a good opportunity like today, and especially when we see that the internals is like staying really high around that 70% level, I try to buy the dips on the YM. I like the YM the best.
Yeah, so whichever your foray, we're YM and Q, ES, any of these would work right now. So we had a little run up here at the market open, drop down, buy a dip. At the same time, he's saying, we're seeing everybody stay up. These are positive numbers. We see the volume here is continuing to stair step up, so that's a positive indicator. These are staying above.
Yeah.
So that's a good way that you can say, yeah, buy a dip. And, these are actually scrunched in. So these are, here's 50 and 100. So these are 50 points if we actually look in.
Yeah.
You buy that dip at 29.1. That's 50 ticks right there.
Yeah.
YM, that's a nice move.
Yep. Yeah, so the plan for trading has been a VA trade when it makes sense. Like the last couple of days, it made sense. Today, just long the YM for me. Although, I think, are you trading the ES because you like the ES with the price indicators? I think
I'm doing a lot of ES trading myself. Yep.
I'm old school.
Yeah, and if we look at the spread has actually come back to be even right now. So I'm actually looking to see if that'll actually be positive on the day is what I'm expecting on this 4-hour chart. Since we were slightly down overnight, I'm expecting it to be up. So we did have a dip down around the open. Now it's recovered, and we'll see if that continues back up or not.
Well, follow the perfect pattern. See is that a 5-minute? Yeah. So it was rising into the open, and it always it's like 90%, 99% of the time. If it's going higher before the open, it dips right at the open.
Yep, exactly.
And then it goes back the way, it should go. It's amazing how that works, really. So I wouldn't be surprised if we're up a couple hundred points today. I think we'll get really close to 30,000 probably. But who knows? Who knows? We'll see. Keith wants to know, Dan, what about you? I was late on that.
Yeah, I'm still doing the similar trades on ES or what I'm mainly doing right now, as well as the VAs, if that's what you're looking for. Is Market Timer working on that AI that would trade all of its trading tools? No,
it's not on AI. No. I use the analogy in the class the last couple of days that the Market Timer is like instrument panel in a 737 or 747. And you really need time to look at it and read it. It's still discretionary though. So I don't, it just would be very, very nearly impossible, I think, to do it as an AI. And if you look at the history of AI tools, they just typically don't turn out really good trades because they can't interpret things correctly. It really takes a human being to interpret. Yeah, there we go.
Yeah, everybody's turning up here. See the upturn there? This is up at 72, correlating with the upturn on all the indexes.
Yeah.
Probably just tweeted something about the plan in China. That was a big one yesterday.
Mm-hmm.
Trades on, trades off. Okay, trades on.
I don't know. I'm very skeptical about yesterday's celebration. very skeptical because uh, what's his name? The president of
Z, or I forget how to pronounce it.
G or something? Or,
G or Z? How do you pronounce XI?
probably Z or G or something. I have no idea. But anyway, that he didn't come. That's in Chinese culture, that would be a slap in the face. And we don't really understand Chinese culture that well here. But it was a slap in the face. It was like, yeah, we don't really take that this seriously. It wasn't important enough for the president to come.
Yeah, I was trying to figure that out. We have an agreement that one party signed, so how do you interpret that?
Yeah. So it's a slap in the face. And I think China just wanted to do this to avoid some unpleasantries with the United States. But they're going to continue doing what they do. I saw that I heard that there was a discussion about all of the agriculture that they're, products that they're going to be purchasing, but they actually prefer Brazilian soybeans, not U.S. soybeans. So I am not really confident that the Chinese are going to hold up their end of the agreement. And they said one of the comments from the president and the vice president was that they have the means to not only enforce, but also to verify that they're sticking to the agreement. And I'm not sure what mechanism they're using for that.
Interesting.
Yeah, I don't quite get that. I mean, how are they going to actually, what kind of transparency, what kind of, maybe it's the payment flows, maybe they're monitoring payment flows.
Yeah, good question.
How are they actually going to do that in real time? Because most of the transactions are, they take time to make them. And then, you get the data maybe 30, 60 days later. Keith says they explained it on Fox Business how they were saving face. It was interesting. Yeah. I mean, yeah, that's about it. And I think in China, they had a completely different story. It wasn't quite the same.
Interesting, just watching kind of the spike there, and the VA is definitely nicely moving up because the Dow was up and the NQ was not.
Mm-hmm. Well, the NQ has been on a run and just a tear.
That's why this can't go on forever, right? They say nothing lasts forever. It's just a matter of time.
Yeah, exactly.
And since I'm watching at the same time, I'll keep it over here for you guys. This is exactly what I'm talking about. That NQ drops. Well, this is pretty steady. That's how you get that spread. That's why we like playing the spread more than just one or the other. So they both have their uses. But this one is, as we've always talked about, you're hedged, you're protected. Suddenly Trump tweets something funny and they both drop out. You don't get in trouble when you're playing the spread. But it's always interesting to watch how they react.
Yeah.
The more you watch, the more you learn, the more you study, the better you are.
Yeah. Yeah. Another thing about that deal yesterday was that they only sent 4 representatives. That was another thing too. They saved face, but they did not take it seriously. They would have sent 20 people if it was a really big deal, and the president would have come. I know how I have a little insight into Chinese culture. My wife is actually is Chinese, half Chinese, and I've learned quite a bit about the culture from her. They want to save face, definitely, but they also were definitely signaling that this was not that important to them. They're just doing it to, kind of get over this disagreement, and they're going to use it to their advantage in some way,
Sure.
you know. Anyway,
Well, you mentioned soybeans. All you need is steak.
that's right. That's exactly right. Did you start reading the book yet?
I got 4 chapters in already. I love it.
Nice. You know what? There's another book that you got to read. I mean, if you're gonna get into this, you really need to read this. This is the seminal work on the carnivore diet. It's called, and I'll put it in the chat. The Big Fat Surprise.
Yeah, what we're talking about, guys, I think Dave might have touched on it last week, is the new carnivore diet that he's been on. He tested last year. It's been amazing for him. And I've been looking for different options, so I grabbed the book and started reading it last night. It's amazing the similarities that he's went through that I also have noticed. So I'm looking forward to it.
Yeah, it's called The Big Fat Surprise by Nina Teicholz.
Yeah,
She was also on look her up on YouTube. She has a fantastic video at the Cato Institute, I think. She gave a speech at the Cato Institute. Very, very interesting stuff.
I will definitely check it out.
Yeah. So Keith, who is this Stephen Kalayajian?
Well, Keith's answering. How quick did you jump in, Dave? Did you transition in, or did you go all in day one?
Well, I was already on keto, so I was already, I was already low carb, so I didn't do pasta or bread for about a year. And I was eating mostly fish, and I still had some vegetables. Like I was still eating vegetables.
Okay.
And then, so it wasn't as hard of a transition for me. If you've been doing carbs for a long time, especially pasta and bread and stuff like that, it would be harder probably as a transition. So you might want to do it on a 60-day basis, start to cut down on your carbs on the first 30 days and just do like a meat and a vegetable or something like that.
Yeah, I saw he's got like a 6-week transition. I'll probably do that one, since I'm on a seafood diet where I see food, I eat it.
Yeah. Yeah. So if you're doing chips, you're doing, potato chips and stuff like that, and snack foods and pasta and breads, then it's going to be a harder transition. So I was on keto for a long time, and I just did cold turkey. I just went to meat only.
Got it.
And it was tough. Actually, the first couple of weeks were pretty tough because I was really looking forward to, vegetables or something as a side dish. But when you really get into it, you'll find that after about 30 days, that's why they always challenge you to do it for 30 days. When you do it cold turkey, give it 30 days because it'll change completely. It's just unbelievable to change. You can't know what it's like until you experience it.
Right. Nope, that's cool.
Yeah.
Keith, I'll pull it up offline. There's a ton of trading rooms out there. 600 trades. If you're looking for that many, in my eyes, I think that's over trading. But
that is way over trading. There's this one guy who's kind of famous, and his trading room was $600 a month. So I joined it just to see what he was doing. He was in the chat, and he was saying that he bought something and he sold it for 1 tick. He sold it like within a second for 1 tick on the ES.
What's the point?
25. Yeah, I know. It's like, what?
Okay, so you made $12.50 and you paid commissions back then, so you made $5 or $10.
Yeah, exactly. So it's just like, it's insane. And he charged $600 a month for that. The problem is that, when I do trading, you can't follow me. Even if you see me do it, if you wait a second later, the opportunity's gone sometimes. That's why as I get older, I get away from short-term trading, except for the VA. I still love the gamma scalping on the options, but you can only do that twice a month. VA is getting down to like maybe once a week. And the rest of the time, the only thing I'm doing is either day trading with the YM if I see a really good opportunity, or I'm just buying long-term stuff. My beaten up stock strategy is my favorite.
Sure, definitely. Yep, these are the ones I see these big moves like this. If you are doing intraday, if I pull this back, yeah, we're coming up to 73. It's getting close to that 80 line, so that's even more indication that this market's going to keep going up.
Yeah. Keith, what is he doing, futures or options, or what is he doing? In which instruments? ES, YM, and Q, everything. So he's got all these people in there just parroting him, I guess. I mean, I don't know. Give a man a fish, he can eat for a day. Teach a man to fish, he can fish for life, right? Hey, did you? I noticed you put 10:45 today. Do you need to run?
I do have something at the top of the hour, so we have to just make sure we're off before the top.
Gotcha.
So yeah, if you guys got anything in the last 10 minutes or so here, let us know. We'll be dropping shortly.
Yeah, just some upcoming things. Dan and I are going to be talking about doing a updated video for the VA Masterclass. I'm working on, I keep saying this, actually I said it last year a couple times, but there is a new indicator coming out. Dan and I talked about it yesterday a little bit. We're using the basis it's an indicator that measures the basis of the futures contract and the cash index. And I promise I am going to work on that this weekend. So next Tuesday, I should have it ready. Can you like keep me accountable for that?
Absolutely.
Get on my butt, because I really want to get that done. Yes, hold me accountable, please.
I will definitely put your feet to the coals.
Thank you. All right, guys, anybody have any questions before we wrap up here? Dan's going to have to leave in a few minutes here, so we got to wrap up. But here's the big picture for this week. We look at the market. We've got 1 day of trading. We've got the China US deal push the market higher. Now that the news is out and this deal is done, I think people are going to start poking holes in it. I think we are getting very, very close to a market top, but we're not there yet. The Fed is injecting $120 billion a night into the repo markets. I don't think that that's going to end well. Just like that Financial Times article I read, I think it's probably not going to end well at all. And if we see something like a 1987 style decline, we're at 29,000 on the Dow. If we go to 15,000 and a very large move, that's gonna be crazy. It's not one I would want to miss again. I missed it in 1987. You guys all heard the story probably. I bought puts in July that expired in September, and I missed the entire move. I knew it was going down, but didn't get the expiration right. That $16,000 I put into puts in July, I wonder what that would have gone to.
You don't want to know.
Yeah, I probably don't want to know. It's kind of like the guy who paid 10,000 Bitcoins for a pizza.
Right.
They did a show about him on 60 Minutes, and he said he wouldn't talk about it because his therapist told him not to.
That's funny.
Anyway, that was funny. Yeah, I probably don't want to know. And I also, I mean, it's kind of funny though, but I was only like 25 years old. So, well, I was 27. I probably would have blown it, even if I did make a lot of money. I didn't have the kind of financial maturity then that I do now.
I was going to say, there's a reason that happened.
Yeah, definitely. I'm pretty sure I would have blown it completely. You need financial maturity in order to handle both losses and wins. I handled the loss fairly well, if I recall, by simply blocking it out of my mind.
Move on.
Moving on, yes. It took me about I think I just did not even look at the market for 6 months after that. And then I got back into my analysis again and started studying and said, I can do this. I can do this. So those are the big stories. Are we going to get a 1987, 1929, 1974 style decline here? I think so. Just my opinion. I'm watching it. I'm waiting. I'm ready for it. I am going to short the heck out of the Dow. And
It would definitely, I think the mix in that would be if they turned off their repo.
well, I think what they're going to do is they're going to turn up the repo. They're going to ignore the rest of the market. Corporate debt is at $11 trillion in the United States. A lot of it is covenant light. I think that's the next catalyst to the decline. There were 500 billion CDOs in the 2008 crisis. There's $11 trillion in corporate debt that's at very worrying.
Yeah.
But so it's 20 times as big as 2008. It doesn't mean all $11 trillion of corporate debt is going to go bad. But I think even if we get $1 trillion or $2 trillion of that going bad, that's going to be a really big deal. That's 2 to 3 times as big as the 2008 financial crisis. Just keep that in mind. All right. I know you got to run. Thank you, everybody, for joining us again. I appreciate it.
Absolutely. You guys have a great weekend, and we will be back on Tuesday next week. Looks like Tuesday and Thursday will be regular scheduled times. So Thursday might be a half short one next week. I'm watching my calendar, so we'll just have the updates as we regularly do. So great weekend.
Awesome. I'm looking forward to it, Dan.
Sounds good, Dave.
Get back into the swing.
You got it, buddy.
All right. Thanks. Have a great weekend, everybody, and we'll see you next Tuesday.
Bye-bye.